Ladies and gentlemen, boys and girls, a new era of Money Info begins today. With Mike King in Las Vegas and Charles Moskowitz in Boston, this is Money Info brought to you by Princeton Research. And let's go to the guys on the phone. Good morning, gentlemen.
Good morning.
How are you?
Hey, well, I guess the big news, according to CNBC and Bloomberg, is we have a brand new hermetically sealed Dow Jones 30 indices with...
You know, I just hate when they do this. No, I really do, because I'm very much a traditionalist.
Yep.
And now you don't really have an apples-to-apples comparison of what the Dow could, would, or should be.
So you don't like tennis shoes being on the Dow?
No.
No.
Well, I mean, I don't care what it is. I just,
right.
Frankly, the only way that I think they should replace him, like giving Citi Chrysler's old symbol, but the company was, bought.
Right.
So it's not there anymore.
Right, exactly. Yeah. Well,
Or some of the others that have disappeared. I mean, I can't for my life figure out why Goldman Sachs is a better indicator than Bank of America, who has housing exposure, banking exposure, lending exposure. I mean, that to me seems like
it's a matter of percentages.
I know
Bank
that.
of America,
I understand.
Hewlett-Packard, and Alcoa only represented 2 to 3%, and their movement didn't reflect itself in the Dow.
Yeah, no, I get that, but
Yeah,
again,
but Mike, how much does Nike represent?
Greg, it doesn't really matter. It doesn't really matter what the name is attached to the stock, because it's trade weighted. Higher price stocks have more of an effect on the actual index. I mean, IBM is roughly $6 per point, let's say. Bank of America is roughly, $2 per point, because IBM is a $100 stock or $180 stock, and Bank of America is, a $14 stock.
Yeah. Huh.
So, it's literally the mathematics of it. It doesn't matter whether, what it is. You could put Priceline in, and it would probably be, or Google in, and it would be the biggest influence on the Dow, because it would be the highest priced stock.
Yeah, and for folks driving around who have absolutely no idea what we're talking about, and Mike mentioned all three companies that are, basically it's kind of like a baseball trade, a 3 for 3, where Hewlett-Packard, Alcoa, and
Bank of America
and B of A come off the 30. Goldman Sachs, Visa, and Nike go on the Dow Jones Industrial Average. So that's first time it's
they're
ever
a better
happened.
Reflection of the economy, really.
Wow. Okay. Yeah, it's the first time this happened since April.
But let me ask you something, Mike. How many people do business at Bank of America, and how many people do business at Goldman Sachs? I have to think more people are involved with B of A between Merrill Lynch subsidiary, the mortgage subsidiary, and the banking subsidiaries than Goldman Sachs.
Well,
Goldman Sachs is a much higher level firm.
Well, yeah, but you'd be talking, say, hundreds of thousands versus thousands, but those thousands are the ones with all the marbles.
Right, well, they're definitely more the movers and shakers, clearly.
Right. Yeah.
But, supposedly, based on our president's redistribution of wealth, Bank of America should be a bigger influence.
Oh, we don't want to go there yet. I
couldn't help myself.
I know, that's all right. It's getting very close to October 1, and that's going to be the information thing. And it was funny. I just went in for like a simple blood test today, and they were telling me, they said, well, everything's going to change October 1st. And it's like, what? And they say, oh, yeah, they haven't told us yet, but, you know, a lot of tests that, you know, are covered now by insurance won't be October 1st. And it's like, oh, great. Is anybody going to tell us? No. We're going to just walk in and say, oh, where's your credit card?
Surprise.
Yeah, surprise, surprise.
I've actually gotten a couple of letters from my insurance provider in the last couple of weeks telling me, you went to see this guy on this date. Please be advised that as of October 31st, this physician will no longer be in your network.
Yeah. I mean, if anybody out there listening has a HMO, you better call your doctor. You know, and you know, even PPOs. You know, things are going to be moving around so much, and it's going to be so different. Check with your doctor to see if they're still going to be part of your insurance plan, especially if you've
I don't know
HMO.
if I've mentioned this before, and I may have, but I saw an interview the other day, got to be a couple of weeks ago now, with the CEO at White Castle.
Oh, yeah?
Okay, so, you know, it's not a major industrial firm, and it's not McDonald's, but they do an okay business.
Yeah, they're
and
very
their
large.
CEO was saying that we have changed our business plan. We are changing how we're executing. We're protecting our full-time employees as opposed to cutting them down.
Mm-hmm.
But we will only hire part-time employees going forward with less than 28 hours a week.
Yeah.
Because he said, we can't afford to sell our product at its current level. We feel that if we raised our prices, it would cut into our business. But we want to protect the people who have helped grow the business. And from here on out, everybody else is part-time.
Mm-hmm. Well, what is intriguing to me is that, you know, at least from what the lady said this morning, is that like various blood tests and stuff like that will not be covered by Obamacare. Well, now, wait a minute. You know, if that's usually your entree, you know, for various medical services, that's going to be a problem. Because the people who really need it are in those lower two, whatever the, you know, they have the Cadillac plan and all the other stuff. But anyway, whatever the bottom two are, may be in danger of not having that covered. I mean, who knows? It's all kind of a mystery, and hopefully someone's going to unveil whatever that's going to be. Let's look at the market today, though, guys. Apparently, the Syrian news. Thank you, Russia. Whoever thought that would happen. Apparently, market's going up. You know, it's you know, hopefully all the stomping about the war and all the other stuff will hopefully go away at least.
Well, just to give people an update, we came into the week this week with just two positions, one of which we've already gotten stopped out of, which was S&P puts. But we bought some WTW, which is Weight Watchers. We bought the October 37.5 calls yesterday at 40 cents.
Wow.
Pardon me, $1.40. I'm sorry.
Okay.
$1.40. They're currently $1.65, $1.90. Nothing too overwhelming there, but they are trading at $1.80 today, up 20 cents. And we also got short a stock that will be in the news on Thursday before the open. We bought puts on Lululemon yesterday.
Oh, my goodness. You haven't mentioned them in 6 months.
Right. The stock gapped to the upside. The options had closed on Friday around $3.70, and we had a bid in at $3.05. So I was looking for a little bit of a rally, which we got in spades yesterday when somebody, I think Citi, recommended the stock as a buy. They took the stock all the way up to almost 73.
Woo!
So those 70 puts got very cheap very quickly. And then the stock came back in a bit. I mean, it closed up over almost $2 on the day, but the fact was we had bought the options when the stock was up over $2. So today the stock opened up slightly, and it is currently trading at 70.36, down 92 cents. And those puts are 3.25 bid, offered at 3.35. The last on them is $3.30. So we're slightly profitable, but we're short. And the reason that we're short is because all of the apparel and all of the specialty apparel and certainly all of the teen apparel stocks have dramatically disappointed. And so, we'll take an educated shot at it. We're, as I said, we're profitable. If the stock were to continue the way it is now, which is down on the day in an up 95 market, we might take the profit before the earnings.
All right.
Or we may take half of the profit before the earnings to cut down on the exposure. And we'll see how that goes.
Time out here.
So we're long one, we're short
trade.
one.
Yeah, awesome trades. Now, how in the world can teen apparel, which is all you see on television, be down? I mean,
Easy.
You go to a school
really easy,
and all
Greg.
those kids are wearing new clothes. I mean,
Yeah, here's the problem. All those kids couldn't get summer jobs.
okay.
They have less money to spend. And frankly,
okay.
regardless of what the numbers say, there are plenty of parents who can't afford $65 for a new pair of jeans at the Gap
or $200 for
or
shoes.
Abercrombie.
Yeah.
And so I think that that's part of it. But the bottom line is, it doesn't matter what the reason is. All of them have been missing. The only ones who haven't been missing, and it's kind of interesting, and we discussed it in the letter a couple of weeks ago, the accessory companies. Fossil has moved back up. Michael Kors, who is, handbags and watches.
Oh,
and
yeah.
et cetera, which, by the way, Fossil makes for Michael Kors.
Okay.
Fossil has a lot, people look at it and, there are Fossil watches in some of the Macy's and stuff. But Fossil actually is the, for lack of a better way of putting it, private label company.
Yeah.
For all of these other guys.
Yeah, there's a bunch
so
of
the
them.
accessories side of the business, handbags, watches, scarves, etc., are all doing well. But the fact of the matter is, the teen retailers are not.
Interesting.
They're doing poorly.
Well,
And you can see it in their stocks.
Yeah. Well, one guy, Charles, that we know is doing very well is Mike King. And congratulations to Mike, because we just read something on CNBC that he won the auction for that oval-shaped diamond that is 118.28 carats, about the size of an egg. So Mike bought that for $38 million. Congratulations, Mike.
He's having it set. He's having it set in a collar for one of the dogs.
Yes.
Because Sherry doesn't want to wear it.
Oh my God.
And my dogs will be fighting over it.
That's right.
But I have news for you. Hey, Greg.
Yeah.
If Mike wanted to put it in the collar of one of those dogs, it could possibly not be in a safer place, because nobody's taken anything from those dogs.
That's true. Yes, that's very true. Oh my!
By the way,
goodness.
I want to mention one other quick item.
Yeah.
I think next Tuesday,
Yeah.
we're going to have somebody on who is more Florida oriented. It's a company called Grill It.
Oh yeah, I've heard about it on the University of Miami football broadcast.
Right, they're just opening what they're doing now is they've been opening up company stores, although there are a couple of franchises other places, like I think in Nashville, but it is really more of a Florida company. It's, healthy eating.
Yeah.
It's sort of like we have a company up here, a concept restaurant called Fire and Ice, where it's very healthy. You choose your protein, and you choose your vegetables, and you choose your sauce, and they do it all right there. So it couldn't be fresher. And this is kind of the same thing. The two restaurants now, I think, are in Pembroke Pines and one in Miami, and now they're going to open one in Coral Gables across from the university.
Sure.
But it's, kind of an interesting one. And the reason that I mention it is because in looking over the charts this weekend, some of these chains and concepts have really gone crazy. Sonic, which was traditionally a $4 or $5 stock, and we traded it a couple of times down there, is a $12 stock. Same thing with Rick's Cabaret and the hamburger chain, Red Robin. I mean, a lot of these, they're not really aspirational type deals. They're really, fair price, good food kind of deals. And as a group, those are doing very well. Yeah.
Well, and it's very interesting that you say that. I'm really excited to get the guys from Grilla because I have heard, we carry the University of Miami, and that's, one of the, I heard one of their commercials.
My alma mater, which
I that's
Florida.
Right.
After how many years of losing? Was it 12?
Yeah, something like that. And they got a great coach. It should be a lot of fun.
Not only that, it was a good game.
Yeah, it should be a lot of fun. Now, funny you mentioned food. McDonald's, according to Bloomberg, is going to get meatier, serving thick and juicy steaks for breakfast. And apparently they're rolling it out. And it's going to be sold in 9,600 of the chain's more than 14,000 domestic locations. It's basically going to be steak and egg and cheese biscuit with grilled onions, 540 calories, they say. So that's, look at that at a McDonald's.
And they're doing wings.
They
introduced wings yesterday.
Yeah, that's true. Yeah, interesting. So they're... it really and truly is amazing. If you look at a lot of the fast food places, they've got huge menus now.
Yes, they do. But, I want to make another point because I noticed it this morning, and that is I went to a place for breakfast this morning that I go on a pretty regular basis. As I've said before, this is a relatively small town. And there's a place called Joe's here.
Yep.
And it's kind of a little diner, probably seats 4, 8, maybe 16 people. And the guy there is kind of dying on the side there, but, he's been here for 55 years. And it's, a local joint where, not to be too detrimental, a lot of the townies go, and me.
Mm-hmm.
But breakfast there, a couple of eggs and home fries and toast and bacon, is about $7.
Mm-hmm.
Maybe $7.50. Who knows?
Right.
Exactly. If you go to a McDonald's or if you go to a Panera for breakfast, if you go to a Dunkin' Donuts for breakfast, you come pretty close to that.
Oh,
and
sure.
Dunkin' Donuts is certainly, if you go to Starbucks, it costs you more.
Yeah, well, Dunkin's combos are like $6.
But a lot of these fast food places, they're not cheap.
Yeah.
I mean, they're not cheap for breakfast. If you take a family of, an adult and 3 kids to dinner or to lunch, it's certainly cheaper than going someplace else. But a lot of the stuff that they're adding is, higher price point.
Mm-hmm. Yeah.
I think a bacon, egg, and cheese on a biscuit at McDonald's is almost $4, and, they give away the coffee for $1 because it's a promotion. So it's, $5.
Yep.
I mean, that, just their price points are getting up there.
Yeah, well, bouncing back a little bit to housing and stuff, the B of A made the announcement this morning, according to Bloomberg. They're letting 2,100 folks go and closing 16 mortgage offices around the U.S., and that's going to occur on October 31. and so that's going to be.
Well,
happening.
it's really hard to compete with a government-owned industry in a government-owned industry. I mean, Fannie and Freddie have raised their upper limits, and a lot of people fall into the jumbo, which used to be non-conforming, but now they're increasing that, so you can get a Fannie or Freddie for a jumbo. It's hard to do business in that atmosphere. And they keep on saying, we want to get rid of it, we want to get rid of it. In the meantime, the company is making money hand over fist. The shareholders don't see it. It all goes to the government.
And apparently,
all goes into the Treasury.
Interesting you say that. Wells Fargo, which is the top U.S. home lender nationally, said yesterday that the third quarter numbers are out, and they may fall 29% to $80 billion, which is still good, but I mean,
right?
They basically are down 1/3. J.P.
Right.
Morgan, which is number 2, which is Chase, says it will lose money on home lending in the second half as volumes drop as much as 40% from the year's first 6 months. So, maybe it is just competition from the government. Gee, where have we heard that somewhere before? Oh, yeah. Holy smokes.
And there's kind of an interesting play in the marketplace. I mean, it's a little late to get into it now. But the Fannie and Freddie stock is basically worthless. But the preferreds, which have, if they want to take these companies private again, will have to be paid off. They've gone from $3 and $4. They're $25 fixed rate preferreds have moved up really substantially. And when I say substantial, I mean they've tripled, because it seems to be the way that things are going that those will be like owning the bonds of a company that's bankrupt. The bondholders may get screwed a little, but when you're buying them, let's say if you're paying $3 or $4 for a $25 stated value preferred that has some income attached to it, it's not unusual to take a 20 or 25% haircut and still get $18 or $20 a share for them. But again, it's a little late for that. I'm just mentioning it because it's kind of an anomaly that you see whenever companies are bankrupt.
Right. So, Charles, are you and Mike ready to run out the front door and buy your new Apple phone?
I have a 5. I'm just not sure. But this new thing that they have where you can trade it in.
Is this you're going into the Walmart thing, right?
Well, yeah, but even some of the Apple stores are.
Oh yeah. Well,
doing it.
actually,
and I'm guessing
you are
they're going
correct.
to. Well, if they give me $400 or $300 for my phone, I only paid $399 for my phone.
There you go, and you get a brand new phone.
I would trade it in and take a new one. Absolutely.
Yeah. Well, and apparently that all starts on the 21st next week. Walmart is diving into this too. Apple stores, Walmart. Verizon stores, I presume those will be the company stores. All
Let's
doing.
welcome Craig Crawford of Texas Gulf Energy.
Hey, Craig.
Good morning, Mike.
Good morning.
Good morning, Craig. How are you?
I'm doing good. How about y'all?
What's going on in Houston?
Well, we're having
great news on this. You got a spinoff of your Texas Gulf Oil and Gas division, right?
Yep. Well, the Texas Gulf Oil and Gas is an independent company that we spun off 90% of it a year ago, kept 10% of it, and we've decided that we're going to spin off the balance of it to our shareholders. We haven't set a date yet, but we're going to get that set here in the next month or so.
And what's the symbol on the stock, Greg?
Well, our symbol is TXGE. Texas Gulf Oil and Gas is going to do some kind of filing so that they have their own symbol, and that is not done yet.
Right. But people who want to keep up with it can look it up by going to the symbol TXGE and looking at the news.
Yep.
Wow, good news.
Is there a website address you'd like to give them?
Our website is tgnrg.com. www.tgnrg.com.
Great. And you also just got about a $2 million contract.
Picked up a 1.9 million, 1.95 boiler project for a nice-sized chemical company here in the Houston area. Lots of work picking up in the Houston area. You know, several $1 billion planned by, you know, Enterprise Products has announced that they're going to spend $4 or $5 billion just outside Baytown. Exxon has announced that they're going to spend $3 or $4 billion expanding the chemical facilities at their refinery in Baytown. I mean, we are really excited about the prospects for our business because these plants, the work they're doing is right in line with the work our industrial services group does.
That's great. So how many other plants, I know the area, around that area, general area, do you think are going to need like retooling and stuff like that?
Yeah, the estimate is that there is going to be a requirement for about 55,000 craft workers in the next 3 years here in what's called the Ship Channel area, and the current availability is about 22,000.
Oh, God.
You can train them. It takes 3 to 5 years to train them. So we definitely have a big shortage of craft workers in the Ship Channel area, and I would say that's, you know, the largest single refining and petrochemical complex that I know of in the world is the Houston to Lake Charles area.
Sure.
Beaumont, Lake Charles.
Yeah.
And you know, I think that's just an example of what's going on in the United States around, you know, refining and petrochemicals because of the shift in balance of production of crude oil.
It's funny you mention that. That's the big story in today's Bloomberg, where OPEC made the announcement that the global market is well supplied and that there is supply growth from the United States, Mexico, and Norway, which are not part of OPEC, obviously. So
that's right.
Yeah, so that apparently they are preparing for those mean folks in the United States to take control.
Well, the good news for us in the United States is that means that we get to keep more and more of our oil.
Yes.
The amount of oil imported, the balance of payments, the balance of import-export is swings.
Oh, Mike's been talking about that for 3 years.
Well, longer than that, I think. Maybe about 6 or 7.
Well, no, I mean, the balance of payments issue.
Exactly.
And yeah.
Yeah.
And all those things are good for us because we provide services and professional services and technical and craft services to those plants where they need help to debottleneck and improve their production. And the work we do helps them increase the productivity of their plants, helps them take a barrel of crude oil and produce a barrel and a half of product.
Mm-hmm.
So that's the kind of work that our companies do. We're excited about the interest that we're getting from our clients. The opportunities continue to grow, and we see a lot of growth in the years ahead.
Well, according to OPEC, the non-OPEC, which is basically going to be U.S., Mexico, Norway, the U.S. is going to
Canada?
Well, actually, they don't list Canada here, which I thought was weird.
Yeah.
But that the U.S. would have the lion's share of 55.2 million barrels a day by 2014. Does that sound right, Craig? It just seems a little high to me.
Yes, sir.
Really? Okay.
Yep.
Huh. Okay. Wow. Well, but what is that going to eventually do anything for our gas prices or no?
Well, the challenge is I don't think that our gas prices are going to shift very much in the current markets or the foreseeable future because it's very much driven by emotion. You know, the retail gasoline price doesn't have a whole lot to do anymore with the wholesale price of crude oil.
I think we've learned that, yes.
Up like a rocket, down like a feather.
That's exactly right. And in the emotion that's out there in the markets, the concern about what's going to happen in Syria or other places in the Middle East, that drives those prices. even as we see more and more of the productivity shifting back to the United States, less imported refined product. I haven't looked at it recently, but I think we're getting closer to net export, to the United States being a net exporter of refined products.
Wow.
Even at that, I think you
imagine what that'll look like when the natural gas pipeline is done.
No, and that's right. Whenever we get natural gas export, whenever we get the cryo plants reversed so that we can export natural gas and see some equity between natural gas prices in the United States and Europe, you're going to see another surge of interest as we export natural gas, because that's one of our largest natural resources.
Craig,
we've been talking about a company that is doing that down in, I believe, Louisiana, Cheniere Energy. They had the sole license to do that, and that stock has literally gone from 3 to 30 in the last 2.5 years.
Sure.
Cheniere is a wonderful company. We've worked for them. We built a number of their LNG facilities for them whenever they were building LNG importation facilities. The market has shifted, and now they're reversing those trains, and we're having discussions with companies like Cheniere and Cheniere about how to build those facilities as fast as possible so they can turn that gas around.
Yeah.
Realistically, how many years is that going to take, Craig?
3.
3. Okay.
3.
So it all seems to be there, and Mike has talked about this too. And actually, Mike mentioned this several years ago, that 2016 seems that whatever that it seems to be the magical year for petroleum in the U.S.
Yep, you're going to see a lot of these large facilities come to fruition, come online in 2015, 2016, and it's going to shift. The market will shift in the world.
Well, it sounds like good news. Sounds like a lot of good news
for us. We're really excited about it.
It's good news for all of North America.
Yeah.
I mean, Canada is certainly going to participate.
You bet.
And and Mexico is already participating.
Yeah. Oh, yeah. Pemex is doing a bang-up job south of the border. I mean, there's no doubt about it. But, when Craig's talking about all this stuff, about the improvements, you just can't help think about jobs. I mean, because all these retooling of these plants mean jobs, and we're talking high-paying jobs too, right, Craig?
Absolutely. They're all high-paying jobs. We have to have the very best craftsmen that we can get, and that they make excellent wages. They get to, generally, we can't get them to come to work unless there's at least a 50, 55-hour work week, so they can make some overtime, and that creates a lot of money in the local economies.
Well, I hate to bring this up. In the oil industry, has anyone been talking about the new healthcare law, which Charles and Mike and I were in the first half hour? Does that seem, you hear a lot of the retail's a bit squeamish. IBM, basically said that they're going to insure employees, but no longer families. Are you hearing any of that in the oil patch?
No, it's absolutely got our attention. We're not sure what the impact is going to be. Particularly contractors, where we may hire, we may have 200 employees today and 1,000 tomorrow, expanding and contracting, and we've got this new healthcare law that, it's, if you read it literally, it sounds like we've got to pay a penalty for every one of those employees we don't provide insurance to.
Oh, boy.
Now, your employees are full-time, I'm assuming?
Well, whenever we hire them, they're full-time.
Right,
but,
that's what I'm saying, yeah.
The model in contracting is you hire them and they work with you while you do the project, and then you terminate them. You get laid off. You don't keep them when the job's done.
And how long do you generally keep them?
Well, so our projects range. Some of our projects are multi-year. A lot of our projects are 60 days.
Wow. So they're basic per diem per project.
That's right.
Okay, gotcha. Wow. Well, see, I haven't heard anything in the healthcare law about something like that. I mean,
that's exactly right. That's what makes everybody nervous, including the owners, because they've got to pay. The owners pay right? The Exxons of the world ultimately pay the contractors to deliver the construction services and the maintenance services to keep their plants built and running right.
Sure.
And it's unclear to us what that's going to do to our cost.
Well, you'll find out.
guarantee
You'll find out in October.
Yeah, I'm not
like
sure.
the rest of us.
And you know, that cost, by the way, people forget, those costs get reflected at the gas pump. You know,
Right.
They get reflected in the cost of plastic material. Remember, plastic is a petrochemical.
Sure.
You know,
Oh boy.
and that comes from all the ethylene plants and styrene
Yeah.
plants.
As are some fabrics.
as are
Oh yeah.
most fabrics.
Most fabrics now.
Right.
Yeah. Wow.
Exactly right. So the consumer will end up paying. You know, it's easy to kind of hide that, bury that stuff, and talk about it and say we wish we knew. Those costs will get passed on to the owners, and the owners are going to turn around and you're going to see that at the cash register.
Oh man.
Getting back to the stock, how much stock is there outstanding?
Currently, about 70 million shares.
Okay. So 70 million shares is roughly $3.5 million in market cap.
At if you say
Let's call it at a nickel, just to say.
yeah, call it a nickel, 3.5 in market cap, which
So
sounds
a
pretty light to me.
$1.9 million contract is a big contract. I mean,
It's a big
50% of sales
Yeah.
for the year. It's right. Yeah, that's very impressive.
Well, our sales for the year run 35 to 40 million. I mean, we're
Right.
growing,
So you're at a discount to sales
that's correct.
as opposed to a multiple.
Yeah, we have not done as good a job as we should be doing communicating to our shareholders what the value of this company is.
Well, you've been
Well, to be
busy
honest,
building it, right? I mean, that's
one of the
that's
main
the problem.
issues, I think, for public shareholders is the fact that there is not an overwhelming, robust market for the stock. When it costs you, when the bid to the ask spread is 20%, like it is, that turns a lot of people off. Would you consider splitting the stock? Getting more stock out there so that there's a little better liquidity in it?
Yeah, the challenge with splitting it is the price goes down. I mean,
Right.
we'd rather see. I think that what we'd like to do is communicate with our shareholders and the market, and let them know what we're doing. Try to communicate our excitement about what it is, that we're a real company. I think the challenge is that there's so many companies out there that aren't real companies, that aren't delivering real services, that the people that are in the marketplace get nervous whenever they're trying. They hear all these different stories. I mean, we're a real company.
You don't consider? You mean you don't consider a company that has 2 auto car washes for using coins to do it yourself a real company?
Yeah, I think they can be real companies, but I think the services and that we provide are key.
No, they're about
in
as
this economy.
mainstream as it comes.
They're very mainstream, and I don't think we've done a good job of communicating that to the market. And I think if we do a better job of communicating that, and we get our numbers moving so that they see the value, whenever we spin out this stock, whenever we dividend that, whenever they start seeing some net income, after tax net income numbers, I think the market's going to start realizing this is a real company that's going to be here for a while, and it's that's going to drive value.
That's where Mike King comes in. He'll do all that stuff. Piece of cake. And do it with his eyes shut. Yeah.
Yep.
That's that'd be perfect.
That's the exciting thing to me about getting to come on for a few minutes and talk about what we do to you, because you guys ask very good questions, and it gives us a chance to learn the kinds of questions that shareholders would ask, and helps us communicate better. Most of every day I'm out talking to clients, and talking to our guys, and building these facilities, not thinking about how to explain it to someone that isn't involved in this industry.
That's really
finding workers. That must be very tough.
And finding workers, recruiting workers, finding workers. As you know, Mike, a part of our business is bringing in guest workers from out of the country where American workers aren't available, and that's been a very tough proposition under the current administration. And we're, as I described at the very first of this broadcast, there's a critical shortage of craft labor coming in the United States.
Are you hearing any loosening at all at the federal level to help you guys out?
None.
None. Oh, great.
Yep.
Oh, no. Well, you've only got another 2 years left, though, right?
That's right.
I hate to say that. Oh,
everybody's too busy running for office.
Oh, yeah.
Or not running.
Or not running. Just not doing anything. Yeah, this is terrible. Here you've got a company that could do a lot better if they could get the workers in the country. And unfortunately, we're not producing enough, of those skilled laborers here. I mean, just nature of the beast.
Yep. Well, last year, in 2007, whenever there was a big jump in refining and petrochemical construction, one of our subsidiary companies did over $100 million in revenue.
Wow.
That year. Yeah. Just on that growth in demand for construction and turnaround services. Yeah,
well, if Hillary, who will probably be our next president, is anything like her husband was,
that could help.
Then we should have a fair amount of deregulation.
Yeah, that could actually that could help.
Even though it'll be a Democratic administration.
Yep, that's what we got to hope, and we got to hope that they get real about health care, about the price of how the pricing of those types of transfer payment programs, which is what I consider it to be, can affect demand and supply. And if they get real about that, so everybody can know what their costs are, because I see very reliably with our clients, as long as they can estimate what the costs are, they will move forward with projects. When costs start getting unsure,
you weren't on the call when I mentioned this, but there are companies that are actually changing their business plans based on that to only hire part-time workers. I mean, they're protecting their long-term full-time employees, which is honorable, but they're not hiring any more full-time employees. So, it's obviously a major issue.
Yep.
Well, Charles,
when a company literally changes their business plans around the healthcare laws, that's pretty extreme.
Yeah. And the thing that you have to wonder, Charles, is you say protecting their senior full-time employees. If those employees leave, will they be replaced? I mean,
probably not.
Yeah. No,
I mean, management people will, because that's essential. But line workers, can't imagine.
Yeah. Wow.
I mean, there are plenty of line workers around.
Well,
especially in the fast food business.
Yeah, okay, maybe fast food, but you think, okay, well, you would think that the oil patch would be an easy place to find workers. Well, I guess what? No longer.
Right.
As Craig has told us over the years, it's not like it used to be in the early 1900s finding oil. I mean, now everything's computers and you name it. I mean,
right.
With the type of drilling and stuff. You need high-powered engineers out there in the field. I mean, it's simple as that.
Engineers end up, building algorithms for trading firms.
Exactly. Yeah.
Well, and the engineers design more and more complex process systems to recover the oil and process the oil. The more complex those process systems, the more talented craftsmen you have to have, the more complicated the welding procedure and the construction procedure. That requires a very high order of expertise. And that expertise is not available in the numbers that it was 20 years ago.
Yeah.
Wow.
But, go to an Ivy League campus and see how many English lit majors you can find.
Yeah. Hey, wait a minute. I was an English major.
$48,000 a year for school.
That's a lot of money. Oh.
Yeah, well, then they're coming out. They're coming out with $200,000 worth of debt and no job.
Yeah. What was that, Mike?
Yeah, are women accessible in the business to become welders and to do that kind of work?
You know, it's heavy physical work. I see more and more women, but it is not a typical woman's job. We welcome women into the industry. It happens that my sister is a chemical engineer, and she works in the industry, and she's very good at it, but it's still a rare.
Not a lot of roughneck women out in the oil patch.
No, sir. There's a few.
Well, you know what, though? I wouldn't be surprised, and I know, Craig, you've talked about this before, about hiring veterans. I mean, the more and more, women we've seen in support roles, say, especially like aircraft and stuff like that, I mean, they're into that life. So, that could be great for recruiting.
And they're smart and well-disciplined.
You bet. Oh, yeah.
Like most veterans. Yeah.
Yeah. And it's, what are the inroads? What kind of inroads have you made with the various services, or how do you even deal with that, Craig? I mean, I would think that would be a real no-brainer for the various services to say, okay, when you end your service here, just give, Texas Gulf Energy a call.
Well, there are a couple of services recruiting specialty companies around the United States that help with outplacement of former servicemen and women.
Okay.
And we work with them to get them engaged in our industry. And, like Navy guys make great boilers. It's easy to transition them from the boilers on these ships to the boilers in a plant.
Oh, I'll bet. Sure.
Yeah. So that, we love those guys. They moving them to a pipe fitter, welder, boiler maker position and into supervision, because they're usually well disciplined. They're great candidates, and we've had a lot of luck doing that.
But again, as you mentioned, I could have been 6 months ago when you were on, the Exxons of the world want experienced people, period. I mean, on their property. I mean, they want the people who've gone through their internships, or whatever, however you would call them in your industry.
That's yes.
Wow. But there isn't any training for this industry? There's no training facility, no way of taking semi-skilled workers and building them. After all, you got 100 clients listed on your website, from Bechtel, British Petroleum, all the way down to Will Brothers, and with 100 clients that need people. Isn't there any training for them?
The community colleges across the South all have pipe fitting and welder programs, have craft training programs. I see them in some of the Midwestern. They tend to follow industry. I see the ABC and some of the unions have maintained their training programs, but it is not, and there are some industry-specific training programs that continue right now, but they're all funded by contractors and owners, and they don't get the fair share of funding they ought to get.
Wow.
We're not investing in training Americans the way we should be. That's my opinion.
But
because we tend to be short-sighted about it. Whenever there's a huge demand for it, like right now, everybody starts talking about, let's set aside 25 cents an hour for training for all of our people. Whenever it gets tight, like it was 3 years ago, everybody cuts that to nothing. We can't invest in training, because things are tight.
Mm-hmm.
That's exactly when you need to invest, because the market's going to come back.
But it's part of the same. Let's increase productivity so that we can report earnings, as opposed to making the long-term investment. The current younger generation has the attention span of a gnat, and everything is accelerated. The amount of time that it, when you're reporting quarterly earnings and you have to show, or the asset base of the company, gets downgraded and worth less, those are the things that they cut, clearly.
Yep, that's right.
And it's very
The
short-sighted. It's very short-sighted.
Yeah.
The kids getting out of these community colleges start at a very high wage level.
Yeah.
$25
You
an
would
hour
think there'd be more.
translates to a pretty good number for a college graduate.
Yeah. Especially when they can't get jobs in the fields that they, really want.
$25 an hour.
A viable
I'll
alternative
apply.
with good pay is got to be a home run.
Yeah.
So
no.
are you
Getting the
advertising,
story
Craig,
out.
in these community colleges? Do they know your name? Do the kids know to come to you?
Yeah, what we do is we participate with them in their training programs. We go present and talk about the opportunities, what the earnings are for them whenever they finish their training, and we continue to invest in that. But you're exactly right. For all of us, it's something we have to look at depending on how our business is doing. If the business is up, then we can start looking a little further down the road.
And just out of curiosity, Craig, what is the average employee? Do you consider them employees?
They are almost all of them are employees.
Okay, and so what's your current employee count?
Our current employee count is probably 250.
Okay, and what would you like it to be?
I'd like
1,250?
I'd like to see 1,250. Yes, sir.
Right. Okay.
Wow.
Well, 250 is a good number. You can make a lot of money on 250 people.
Yes, sir.
Yep. And
So keep up the good work.
yep.
Yep,
And
well, thank you for having me on this morning.
you betcha. And
Great
hey,
industry.
best of luck to you.
Conversation.
Yeah,
Yes,
best
sir.
of luck to you. Okay.
Thanks, Craig.
Craig Crawford, Texas Gulf Energy, TXGE is the stock symbol, and TGNRE.com is the website. Anybody out there that has even remotely thought about the petroleum industry, gosh, I mean, they're talking upwards of $25 an hour, up to $50, 75. I mean, it just keep going.
Absolutely.
Yeah.
Absolutely. And
we have a Rule 17B disclosure to make.
Okay.
Princeton Research has paid 200,000 restricted shares and $500 a month to do investor relations for them.
Great.
Well, that sounds
Okay, Greg, two things.
Yep.
SBGI,
Yes, Sinclair Broadcasting.
28 and change up another $1.65.
Our next door neighbor. Yep, they're our television partner, and you bet. Yep.
And secondarily,
Yep.
on the teen retailers,
Yep.
store-to-store comparisons for Urban Outfitters disappoints,
Uh-oh.
and the stock is 38 down 4.5.
Wow.
There's another teen retailer.
Another
that's not
teen
making
retail.
it.
Wow. Okay. Hey, great show, guys. And don't forget, go to the PrincetonResearch.com website if you want to listen to the show again. You can also go to WPSLTV.com or our WPSL TV or WPSL Facebook page, and we'll have it up there for you. Money Info, brought to you by Princeton Research with Mike King in Las Vegas, Charles Moskowitz in Boston, and today, Craig Crawford of Texas Gulf Energy in Houston, Texas. The new home of Dwight Howard, I might add. Welcome to our studio, Orlando Magic guys here. WPSL Port St. Lucie.